Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, a critical stretch for your money as mega cap earnings begin in a matter of hours. We'll debate what's at stake for this record-setting rally. Joining me for the hour today, Joe Terranova, Jenny Harrington, Steve Weiss, and Bryn Talkington. We'll take you to the markets. Carl just set the table for you with that news from the FT. It's given a little bit more of a bump to stocks, as you see. Dow up near 1%. There's the S&P getting a lift. We can show you intraday, too, because it really does tell the story as these trade headlines continue to come in. There you go. There's your S&P midday. Joe, we have a very big stretch that now begins over the next couple weeks because mega cap earnings, as I said, kick off in a couple hours. We can show you the calendar, which really lays it out. Mostly next week, but some important ones are this week, too. What's at stake?
Well, first of all, that stretch begins with you coming back. Great to see you.
Did he behave himself while I was gone, and he being Weiss?
Modestly, but I know now that you will rein him in and keep him under control.
Okay.
I've been unleashed.
I'm well rested.
You are well rested.
He was unleashed when I was gone.
But look, Scott, I mean, while you were away, and even today, it's just a continuation of really, really good news for the market to cheer and applaud. And several weeks ago, I told you I expected that the third quarter, this was the potential quarter where you get a little sideways to lower action. I still think the leading indicator for that is going to be the semiconductors and going to be the technology names. So here we are. We're stepping into earnings. Alphabet, Tesla, IBM. Next week, obviously, we know the rest of the Mag 7. And they're going to be critically important. They're going to be critically important because what you want to pay attention to is the reaction. What is the reaction? Do we get a continuation of a lot of good news and good price action, or do we finally signal that there's exhaustion in the market, the need to pull back, good performance, you get the good earnings, but you don't get the performance.
There's not a lot of exhaustion, it doesn't look like.
Not anywhere. Not anywhere.
Joe T's at a record high. That gives you an idea of the momentum that remains behind this record-setting rally, Jenny. So you have a lot on the line for a lot of stocks that have done unbelievably well over the last 3 months. From the mega cap space, that is where the epicenter of this whole thing is. Nvidia's up 65% in 3 months, Meta 36, Microsoft 34, Tesla 33, Amazon 26. Alphabet's up only 22%. Only 22%, and no one owns it today. Why? Why? Did people write this company off and their position within AI too much too soon? What do you think?
I think this is a welcome back to you, which is that I own such a small piece of Google, Alphabet, that I sold 95% of the position, but said, you know, it's pretty cheap. I do have my concerns. So I am participating, not in any meaningful way. If the stock doubled from here, it really wouldn't matter. I think the issue is still there, and I think why people bought it is that Waymo is number one. And if you take a look at what happened after we had Tesla have their robo-taxi announcement, it started moving up when people focused on that. And I also think that they're looking for companies that are cheaper, you know, that are left behind. So they may have enough Meta, they may have enough Microsoft, they may have enough of the other Mag 7s to say, look, you know, they stand a really good chance of definitely being in the conversation with AI, and right now that's more important to me, as is Waymo, than perhaps losing share in search.
Your pal Farmer Jim made a good call on this name.
Sure did.
Yep.
On the day of the Eddie Q sell-off.
Yeah.
Right? He's in the courtroom. He's talking about, well, first time ever, you know, we see a drop-off in search. And the stock's like, oh, stock goes down, everybody, including many on this desk.
Josh and I pushed back on him
We're
at the
like,
time. Sorry, Jenny, step
wow,
up. We pushed back.
Maybe this is existential now because this is what they are. This is at their core. And the stock's up 25% since that day.
Since that day.
25% since the quote-unquote Eddie Q sell-off.
Yeah, but that's a small time period. So maybe if you're a trader and you nailed it on that
day. The stock's up 25% since the like a tremor.
Okay, and it's up 1% year to date, and it's up 5% over the last 52 weeks. But I'll tell you why we don't own it. Because this is one that I've been telling you, Amazon and Alphabet have been kind of pecking at the edges of our screen every week for our disciplined growth strategy, where we're looking for a high free cash flow yield. And the free cash flow yield is getting there. But here's why we haven't bought it. And it really boils down to just this. Gartner's forecasting a 25% drop in 2026 in single search engine queries. At the same time, you look at Meta, and they've got 90% margins in their single search engine queries, right? So however you look at it, even if they do great in AI, even if they do great with Gemini, it is not as profitable as the main business, and that keeps us at bay. So you look at it and you're like, okay, 19 times, decent earnings growth ahead, but compared to all the other Mag 7s, I think that their earnings are more at risk. I know me personally, I am borderline not using Google to search anymore. I'm using ChatGPT, I'm using Claude, I'm using Grok, I look at Gemini a lot.
Perplexity,
It's just
on and on and on and on. But
you can, okay.
But maybe that's why the mobile's had a 40% discount.
Yeah, that's why it's the
also.
cheapest Mag 7.
I mean, that's right there.
Define discount.
Now-
Discount to
now-
what? Discount
let me tell you
to what?
something. It's always been
No, it's
among
always
the
been, yeah.
cheapest of the Mag 7s.
Well, because you're buying an ad company, right? I mean, that's basically what it is. That's where they made their money. But this may all turn around. It may be down 15% tomorrow.
You also have the DOJ ruling that is ultimately we're going to learn in August what the resolution of that's going to be. Do they need to be broken up? That's important as well. But this quarter,
But that's 50-50 if the sum of the parts
absolutely.
is worth
But
more than
why has
all.
it gone up 10 straight days? It's about this quarter. It's about Google Cloud being really strong. It's about digital ad sales coming back very strong in the quarter. And I think tonight they're going to report a really good quarter.
Yeah, Bryn, we almost buried the lead. It's coming off 10 days in a row up. It's trying for the longest winning streak ever today. And now it gets added to the top picks list at Oppenheimer. What are your expectations for this evening?
Well, I think that with Google, the expectations are for 11 and 16% revenue and earnings growth. But I think as everyone's talking about, whether it's Claude, Gemini, et cetera, all of these LLMs are going to look more and more the same. And so I think where Google long-term has a challenge, if you look at these companies, Google's actually the most vertically integrated to win. And if you think about Gmail, Google Calendar, Google Search, you have YouTube. Google has all of our data. They could easily flip that on and make a really powerful AI assistant, but I think it would freak everybody out because at the end of the day, guess what? They still sell our data. And so I think that where you have, Mark Zuckerberg is just like full force, poaching talent. They can get their AI in Instagram and Facebook and monetize that. I just still feel that with Google, it will remain a cheaper name because I don't think their ability to actually monetize their AI has been clear. And I don't think we'll get any clarity of the ability to monetize, which is the key thing, monetize AI. Whereas with Meta, they're going to monetize it via Instagram and Facebook because we all buy stuff every time we go on there.
That is the key. Can they maximize their monetization model? It's unproven. Mackenzie Sigalos is following that for us from San Francisco today because that's the key question. Mackenzie, isn't it?
It absolutely is, Scott. The biggest question for Alphabet is whether its artificial intelligence push will cannibalize its highly lucrative search business. So investors are really watching to see if this AI pivot can power growth without destabilizing Google's core. The company rolled out AI overviews and a new AI mode tab this quarter, but there's still no clear monetization model. Analysts expect softer click volumes, but better conversion rates. Still some signs of resilience. You've got Raymond James noting that impressions are rising as advertisers boost paid search budgets to offset lost organic traffic. Cloud remains another key focus. Alphabet's spending $75 billion to expand data centers for Gemini and its enterprise tools as it tries to catch up to AWS and Azure. Now, shares are lower today, snapping that 10-day win streak, its longest in nearly 15 years. Alphabet is up just 4% over the past year, trailing the NASDAQ 100 and all Mag 7 names except Apple, Scott.
We'll get more questions. I don't know to what degree we'll get the answers we want fully, at least the skeptics. Mackenzie, thank you for that. Mackenzie Sigalos in San Francisco. We'll continue the conversation in a moment, but we do have the highs of the day for stocks. Let's go to Megan Casella down in D.C. now with a news alert, more perhaps on that FT headline that the United States and the European Union are reportedly close to a tariff deal. What do we know?
That's absolutely right, Scott. The FT is citing 3 people familiar with the discussion, saying that the U.S. and EU are closing in on a deal that would lead to 15% tariffs on all imports coming in from the European Union. Now, stocks are up on this because that would be a big step down from the 25% threats, 25 and 30% threats, I should say, that we've seen against the EU so far. Now, the FT does use some interesting wording here, saying Brussels could agree to these tariff rates. So there's nothing set in stone. And I want to highlight that I talked to a White House official just a few minutes ago about this. And the official said to me that it's very fluid and close is relative. So this is a very fast-moving situation, and nothing has been finalized yet, but they are looking at a 15% tariff deal here. Now, the FT also reports that both sides would waive tariffs on some products, including aircraft, spirits, and medical devices. So more to come on all of this, Scott, but we do know this headline comes just after European officials have continued to meet with their U.S. counterparts this week, including Commerce Secretary Lutnick earlier today, and we do know they were briefing EU member states today, leading now to this headline about 15% tariffs. Scott.
All right, good stuff, Megan. Thanks. Keep us updated, please. Megan Hisela down in D.C. We said stocks at the high. Show the Russell, too, because the Russell's the best of the bunch today. It also has the most ground by far to make up year to date. There's no question about that. It's barely up 2% relative to everything else, which has pretty much done well. Obviously, the market over the past few months has ripped in general. Year to date, it's a little bit of a different story when you look at the full scorecard.
Russell's up 4% so far month to date.
You start to get more of these deals where you start talking about tariffs in the past tense, yes, rather than what's still to come. Is that the thing that ignites the broader rotation? Because there are some today, like JP Morgan says, investors should still be on the lookout for a market rotation.
So here's the interesting thing about that. I think that the overall investment bias from money managers is going to be skepticism. Because so many times over the last several years, we have believed that this is the moment that the Russell is finally going to have its mean reversion and begin to outperform. Now, what I could tell you, and just purely looking at my strategies, looking at momentum, so far, the month to date, it is the Russell that is leading higher, up 4% relative to the S&P, up 2%. Underneath the surface, you have materials, real estate, utilities, industrials that are kind of moving that and advancing it forward, and even to a certain extent some of the financial companies. So to your point, there is something building here fundamentally. What's really left is, in terms of the tariff resolutions, a deal with the Chinese. Yes, that's still something that needs to be resolved. Mexico, Canada, India. But we're getting there. We're getting there, and I think we're getting there a little bit faster than we expected. And if we do that, then you can expect that you are going to see that mean reversion catch up.
You know, I'm not going to nitpick with faster than expected because the market's already assumed it's going to happen, given that it's trading at highs. These deals are very, very complicated. I mean, closing a normal transaction is a 6-month process. Here we're trying to do what's never been done, typically takes multiple years. So regardless of what the result is, whether it's 15, which I think is very reasonable and actually a great tariff, or whether it's 25 or 10.
Well, a heck of a lot better than what the alternative could be.
Yep. And it removes the uncertainty, and you could move on. So this will, to me, obscure any poor earnings from the Mag 7, although we're seeing today that that NASDAQ is decidedly lagging and actually sold off in the news. So it's the broader, it's the Russell, as you point out, and it's the S&P, which is going to primarily
the more deals you get, the more clarity you get. And here we are in earnings season, as we just said. Forget about the notion that CEOs can't give guidance because they don't know what the environment is going to look like in the months ahead.
Yep.
The more deals you get, you cross those off the list, and you're like, well, I have a better idea of what my CapEx is going to look like. I have a better idea of what my margins are going to look like. That's the whole game.
And equally important, or perhaps more important.
And you also, but you also get with the bill that was passed, clarity from a tax perspective of I can write off R&D, I can write off this, I can't write off that. And so I think between the huge amount of stimulus that the economy, not equally, but the economy, parts of the economy are going to get from the bill that was passed, plus the clarity, plus we saw a budget surplus last month. If that can continue, we'll see. I think that all of a sudden, it wasn't that CEOs knew that things were going to be bad last quarter. There was uncertainty. And so I think as the economy's doing fine, and I think the economy's going to pick up, it has to pick up. You can't pass this multi-trillion-dollar bill and not have it be stimulative. That creates problems. And so I think it does set up for a back half that just continues to be robust. I mean, our way to play the broadening has been, we've owned it since January of 2024, has been RSP. So although it's equal by company, it's not equal by sector. And so financials and industrials are the two largest sectors. And so that's where I think is important to start getting these other areas. I think small caps are a little bit different, but other areas outside of the Mag 7, having those areas be dragged along with the Mag 7. It's not that there's going to be a rotation. It's that a broadening out where there's more participation, I think would make sense with the narrative that we have between trade deals. But I think the budget deal, the budget deal, more important.
The critical point here, if I could, is that it gives the Fed visibility on inflation.
Some things remain the same.
15 minutes in, here we go.
Well, it's critical. You know, when you have information, everybody needs to hear.
I hear you.
Inflation, the Fed is the primary objective here.
But you need for the real broadening to take effect. I'm not talking about small caps, whatever. You need the fog to dissipate, and you need the muck to stay off the windshield. Right? That's been the story thus far.
Yeah, and so if I get like really granular at the stock level and try and go exactly there, I look at my portfolio and you see things like Whirlpool and Stanley and LyondellBasell that have had enormous relief in the past couple days. And you could say, okay, the uncertainty is dissipating, but to me it almost just feels like relief, which is this isn't going to be quite as bad. So these stocks traded down tremendously in the immediate aftermath of Liberation Day, and then they didn't have the bounce that the rest of the market had because there was, exactly as you said, Scott, too much muck on the windshield. And so now there's more clarity. There's just straight up relief that they know what their input costs are going to be. They know how things are going to play out, and so it's a healthier consumer. It's a healthier COGS, cost of goods sold for them. It's just a healthier environment, and you see crazy relief. Like those stocks were up 4% and 5% yesterday. They're up almost 3% today. That's not anything changed at the exact company. It's just the environment taking a bath.
Are you more positive? Hold on, Joe.
Yeah.
Are you more positive than you've been in months?
Okay, still not necessarily on the broader market, and it's the same reason over and over, which is 22 times for the broader market, to me, just prices to perfection and a perfect economy and a perfect growth scenario. But you step back from that and you look at strategies that aren't trading at 22 times, right? So you can look at value, you can look at mid cap, you can look at the dividend stocks, and they're trading at a fraction. They're 15 times earnings, 13 times earnings. They have decent growth ahead. So I'm significantly more positive on those areas right now as the clarity is
leaking in. If we were
in.
trading at 22 times prior to the tax cuts getting extended, and prior to the tariff deals getting done, then why can't we justify that, if not more, if you think that the growth that all of that is going to stimulate is actually going to be strong enough to justify it?
Because here's the thing, you said tax cuts extended.
Yeah.
So nothing actually improves on any corporate balance sheet because their tax rate isn't suddenly lower. So they're not actually making any more money. They're just not going to make less money because taxes went back to what they were. So I think that was incorporated in. And then with tariffs, they're still significantly worse. So prior to April 4th, prior to April 3rd, right? 2nd, whatever day it was, the historic tariff on average in the United States was 3%. Yeah. On April 8th, it was 30%. Today, even after what we've just seen, it's about 15%. So tariffs today are 5 times more than they've been for the past 25 years.
Yeah, but
we haven't digested that, so it's better.
But what happens? The level of economic growth, the potential of it, is so much greater than it has been.
Why? Why is it so much greater than it was?
I mean, I don't know. So you got the tax thing done. You're going to have a
status quo now.
Is it?
Yes.
Is deregulation status quo?
No, but we haven't seen a lot of that coming. So for the banks, for the midstream energy, like I'm psyched. Right, and the deregulation should be really great in those areas. That's really going to impact them.
Rates coming down, like housing market getting.
But I'll argue with you on rates. The Fed cut 100 basis points last year. The interest rates that actually matter, the 10-year, the 5-year, didn't move.
What's the impact on the most important tailwind in the market? Earnings. What's the damage to earnings from what you're talking about? Because we're looking at.
Okay, here's the answer, Joe. Nobody knows.
Well, wait a second. We are 20% in for the current earnings season. The EPS beats are close to 90%.
Okay,
1 year ago, they were 80%.
Hold on. There was still major
hold on.
advance buying in front of the tariffs.
Exactly.
In front of the tariffs coming into effect, you saw major advance buying. So tariffs have had no effect. The effect
still have good earnings
after this quarter. But
you don't have that. You don't have that in the financial sector.
Good earnings on a stale economic environment. And even Jay Powell said before, he's like, look, I really can't cut rates right now, especially with the tariffs being kicked down the road until August 1st.
Not especially with the tariffs. They would have cut rates if not for the tariffs.
And the tariffs being kicked down to August 1st, he said now it's even further before we can see what the impact is going to be.
There's going to be a negative impact from the tariffs, unquestionably, because you're raising costs.
So we don't know what.
But as far as the market's concerned, the base case has shifted and been accepted at a much higher level than 5%. So while I agree with you in terms of where it was versus where it is, I also don't believe it matters right now. Could it matter in earnings in subsequent quarters? Absolutely, and I think it will. That's very clear.
Let's talk about clarity, muck, whatever you want to say about Tesla, and whether you get, Bryn, any more clarity today with the earnings after the bell. Because we need answers. Investors do. Bulls like you. Although your enthusiasm's been more tempered, I think, of late. You've articulated that well in the shows that we've discussed this stock. Whether it's regarding EV sales in general, whether it is regarding whatever brand damage was done by the founder as a result of the foray into the political arena as dramatically as Elon Musk did. Do we get any answers? Do we get any clarity tonight?
No, I don't think on the, where I've been, I think, really clear is like the fundamental business today is in decline. So the expectations are like -13%, -22% revenue and earnings. So going in the wrong direction. But I think on top of robotics, they opened that really cool spot in Hollywood, which has just been packed, which is very positive. I think with robotics, with electricity, with robotaxi, with FSD, these things the market has said, we will give this company the benefit of the doubt. And as I said the other day, I bought it at $293 the other day when the market had a panic attack because he's going to give some money to politicians like everyone else does. And look, the stock is already at $333. And so I think as an investor, know where you are. I think the stock continues to trade in the 260s, 270 to 350s, and so 360s. And so I think we're at the top end of that range. So I would be selling calls up here because I don't think it's going to go through that until you actually start seeing new revenue streams actually even remotely begin to monetize. So I just still say trade the channel in the company because you can make a ton of money selling calls on the stock.
So, Joe, in the most recent rebalance, right, you didn't bounce Tesla.
Well, we're going to, at the end of the month, we're going to rebalance once again. The end of July, we rebalance. So we'll take a look at it. To Bryn's point, though, the momentum, it has bounced from earlier in the month when we came in and we had that weekend where it was below $300. But from a fundamental perspective, nothing has changed.
Roth says going to $395.
Well, look, fundamentally, this company has challenges in front of it. I don't think Bryn would disagree with that. When you have a quarter in which you're down 20% on your revenue growth and you're down 9%, rather 20% on earnings growth, 9% on your revenue growth, and now you're going to do that again in the current quarter, there's a growth challenge in front of you. And you have to question from a fundamental perspective, where do you see that turn in growth? And I'm not sure there's anything in front of us other than Elon Musk getting on the call tonight and saying, hey, I'm back and I'm paying attention and I'm driving the train. But that's not enough.
You're going to talk a lot about autonomous.
You can talk about
that's the obvious future.
Well, we know about the rollout of the robo-taxi in Austin. We know that, but we also know, Bryn's waving her hand over there, we also know that Waymo's got some really good technology, and Waymo has a nice partnership with Uber. It's one of the reasons why I own Uber.
Bryn, you wave, now you speak.
Yeah. Okay, well, two things. On Waymo, doesn't the Waymo cost $200,000 per car? Okay, so let's just realistically, this company, I don't know how that's revenue positive. I think, though, where from an earnings perspective, we need to talk about China. And they actually just I think they're just starting to sell, or going to start selling the YXL. So they're making in China a third row and slightly longer Model Y. I think it's going to have really good reception. But ultimately, that U.S. sales, European sales, the issue is like what's happening in China. So from a fundamental perspective, I do still think that's the biggest risk. I don't know what these numbers will be because China just continues to flood their own market with these EV companies. And so, but once again, there's no better innovator of our time. And so I think this is where the market is like, Jensen Huang has said ad nauseum, it is impossible to see how they stood up XAI in 30 days. And so I just think that's why the market will continue to give the benefit of the doubt with this company. And it's going to continue to be one of the most valuable companies in the world.
Okay, we will take a quick break. Bryn, what is your final trade?
AbbVie, I like the stock technically going into earnings at the end of the month. I think we'd see a breakout after earnings July 31st.
All right. Weiss is a heck of a coming back present, but I'll take it. What are you going to do?
Yeah,
Sometimes you have no choice.
You don't. Hey, neither do I. Uber. Look, I've been thinking about buying this for a while, getting back into it, and I'm still considering. I think they will have a good quarter, so I'll let you know if I do buy it on a timely basis this time.
Okay, good. That would be helpful.
Yeah.
That would be helpful. Jenny.
Western Union. If you look at the steadiness of the earnings and the dividends and can tune out the political noise, it's like owning a bond with an 11% yield.
Joe T.
Live Nation appears to be breaking out ahead of earnings.
All right, stock of about 1%. Thank you. I will see you on the closing bell in a couple hours.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It is Wednesday, July 23rd. It's 4:58 p.m. It's almost 5. It's after the close. And in this video, we're going to take a look at the index ETFs, like the SPY, the QQQ, the Dow, the Russell 2000, Bitcoin ETF, the Euro stock, ETF FEZ, as well as Google, RSP, LYV, Pega. These were stocks that were discussed on, Pega actually wasn't, WHR, AbbVie, and WU. These were all discussed on the halftime report. Okay, so what we're going to do is look at the technicals and see if any of those stocks make sense, right? Should we consider investing in those stocks? And then we're going to look at Tesla and Apple, as well as some requests from our members. Actually, one request, copper. Okay, COPX is what we're going to look at. And why don't we go ahead and get started? Well, as you can see, the Dow Jones up 1.14% today. That's a nice move, right? It gapped up in the morning and went sideways a little bit. Around noon, it continued its move up beautifully. NASDAQ up 0.61%, S&P 500 up 0.78%, and the Russell 2000 up the most, again, 1.53%. In fact, I'm going to show you guys something about the Russell in a few moments when we look at the IWM. But let's look at what else are we going to look at? Oh, yes, the map. Let's look at the heat map, folks. So here is Microsoft, Apple, NVIDIA. Now, an important note, Google did drop. Okay, it actually closed down 0.31% at 4 p.m. However, things did change after hours because they did come out with their earnings announcement. So let's take a look and see how Google is looking after hours right now. We'll look at this. We'll press this after hours performance. Oh, look at that, up 1.31%. By the way, that's one of the stocks in my portfolio. Broadcom, NVIDIA, AMD, ADI, all looking good after hours. T-Mobile is up 5.01% after hours. Interesting. I'm not sure exactly what took place there because it was only up 0.29% at 4 p.m. And let's look at the sectors real quick. And today, the healthcare sector, let me refresh this. Let's make sure it's up to date. Healthcare was up quite a bit, 2.17%. Interesting, because healthcare hasn't really been, it's kind of been a laggard if you think about it. For the 1 month performance, I mean, it's kind of at the bottom 4 here. And if you look at the 3 month performance for healthcare, it's at, it's like one of the lowest next to consumer defensive. So the fact that, is there a sector rotation taking place? Possibly. So utilities did drop a little bit today, down 0.57%. But for the week, it's up 2.83%. And basic materials and consumer cyclical looking good so far too. All right, let's get into the stocks now. And we'll start off with the S&P 500, the SPY ETF. Look at this. Beautiful, right? Is there anything more attractive and more more appealing. That's a better word. That's a better word. We don't want to call it attractive. It's an appealing chart is what it is. It's up 0.85%. And what I like about this particular chart is the fact that it was kind of stalling in this little area here. You can see it was stalling for 3 days in a row. And look at that. Now it popped up. And I love this kind of candle. When it doesn't have a wick on the top, that tells me that it closed strong into the close. And we can see that on a 5-minute. Okay. There it is. Look at that 5-minute chart. Here we are on the 23rd. All right. Very nice. This is what I like to see. Now, let's look at the QQQ ETF. Also looking good. Now, this one did not break through this little consolidation area. So the SPY is looking a little stronger, obviously. What about the Dow Jones? DIA. Okay. Dow Jones did, in fact, break through this prior high right here. You can see that little high right there. But it stalled at the 451.34. Why is that level important? This one right here, 451.34. If we go back in time a little bit, all right, let's do that real quick here. You can see that price stalled at these levels, at that specific level back here, okay, and as well, and also right here. Now, when that was actually going back to 2024, all right, around December of 2024, and then again, January 31st, 2025. So again, if price can break through this level, 451.34, that's going to be really strong, strong move for Dow, I think. Russell 2000 today had a nice day. This one also broke through a consolidation box, as I like to call them. Barely. You can see that it did break above that high right there. So that's really important. And I do like the fact that volume is increasing, and I like that ADX is moving up. Now, let's not forget, August 1st is just around the corner. So that's one thing you want to pay attention to. But right now, things are looking very strong here. What about the weekly chart? Guess what? It finally broke through the Ichimoku cloud. Very bullish. Very bullish. I gave it a blue flag today. Now, will I have to strip it away? Will I have to strip that blue flag away from the Russell on Friday? Possibly. Why? Because this is a weekly level that we're looking at here. And if this price, by the end of this week, by Friday, 4 p.m., gets back under that cloud, it will no longer be considered an ultra bullish type chart. All right. And the other thing is that the cloud itself, I mean, the single span A is moving up, but it hasn't quite crossed above the single span B. And if you look over here, folks, the Chiku span, that white line there, is still under price. So it's not exactly perfect, but I gave it a blue flag because I like what I'm seeing here with the Russell. It's showing some strength finally. And so we'll see what happens with that by the end of the week. And FEZ, Euro stocks, okay, nice update today. It actually was up the most out of these ETFs, 2.37%. That's nice. Let me get rid of that little thing there. So it was stalling at that level. It closed above that little high right there of 60.61 that I had drawn. Now there's another high here that it would be nice to see it break above that level too, but I like what I'm seeing overall, okay? Bitcoin. Steve Weiss, well, this was back on July 16th. This one dropped a little bit, 0.78%. Here's a weekly chart is what you're looking at. Let's look at the daily. So let's get rid of these. These are no longer really that relevant. Or what I could do is I could sort of create a new pattern here because it is building a new sort of symmetrical triangle pattern that you see right there. So it's still kind of stuck in this consolidation stage. It's under the Tenkan, but it was a bullish candle, even though it gapped down and it was down 0.78%. So we might see a pop up here soon, possibly, maybe tomorrow, maybe Friday. The VIX dropped again, down 6.85. That's a nice drop for the VIX. The volatility coming out of the markets. In fact, it actually got under this low right here. You can see that. Whoops, let me just draw that. Get it exactly right there. Do you see that? So under that little candle right there, it did in fact get under it and closed under. So that's very nice. We want to see the VIX dropping. Okay, volatility in the markets. And all right, let's look at the stocks that they talked about on the show. Of course, today was a big day for Google. And by the way, I do have a position in this. I'm only bringing it up because it was a big day. They came out with their earnings today. And so I added a position here on July 15th when it broke that level, 181.23. It's moved up a bit. It's moved up a little over 4%. But actually, at the close, now let's look at it now after hours. There's a secret button that I have up above here. that I can press, and see where it says include post market. That's the after hours, and that's what it looks like now. So look at it, it's still moving. As you can see, after hours, we can switch it to a 5-minute here, and you can see after 4 p.m. So after 4, the very first like 5 minutes, you see this volatility that occurs right after the announcement, and then it just starts taking off. Okay, so obviously Wall Street likes the data, the information about the earnings announcement. That's very positive, and so it's doing quite well. Now, do I really care about all the details? Not really. I just want to see my stock going up, really. But it's always positive to see it going up. Now, since the opening, it's up over. It's going to be up over 7.8% so far, and it's still moving up. So that's beautiful. All right, let's go to the next stock, RSP. Here it is. Let's go back to the closing. Now, it closed up 0.83%. This is the Invesco S&P 500 equal weight ETF, and I like this one. Today, it actually broke this consolidation. So that is very bullish. I like it. I think it's going to continue. I like what I'm seeing down here with the ADX, which is that white line moving up, while the positive DI is above the negative DI. Check out yesterday's video if you want to find out more about how to understand the Ichimoku indicator. I went in depth about it in the Josh Brown video yesterday. Live Nation is another stock that I actually own. I've added it back on July 14th, and that one there is also up a little over 4% right now. Up 1.79%. It's breaking through this level, so it's actually making my trade feel a little bit better. I feel stronger about my decision to be in that trade, obviously, because it's moving in the direction that I want it to be. Here's another one, folks. Okay, now Pegasus Systems. I'm bringing this up only because, well, I want to basically just kind of flaunt it a little bit, because I did recommend this stock over the weekend in the members only video. This was one of the 20 stocks that I shared with traders, and yeah, I said let's keep an eye on this particular stock. It's up 13.92%. I added the position when it got above the Tenkan-sen and Kijun-sen over here. Okay, so next earnings will be on October 22nd. It broke through that 57.01 level as well. You can see that right there, that prior high, which is, let's see, it goes back to January 28th, 2025 or so. So that's really important, okay? It's not hitting all-time highs yet. This stock has the potential of reaching 74.40, which is this prior high back here from 2021 or so. You know, we're talking about a potential move of, let me just hover there, 21.97% before we reach 74.40 or around that level. You know, we're talking about almost 22% potential return. This is kind of like in the beginning stages. I like it. All right, let's take a look at the next one, folks. And by the way, that's the daily. Let's look at the weekly just so you can see what that weekly looks like. There it is. Okay. That 74.40 is a monthly level. I found that by just kind of throwing on the monthly chart and just looking for the very highs there, and 74.40 is where it's at. So that's what I'm talking about. That's why I think it has some potential here after emerging out of that cloud. Remember, it's never a good idea to add positions, new positions, when stock is under the Tenkan-sen and the moving averages, because you can see that big drop that occurred right there. Okay, that's a monthly level. And so let's measure that for a moment. I'm curious to see how big of a drop that was in the past. And by the way, that was a matter of years that it stayed. So it's dropped about 74.68% in 1.1 year. Okay, that's crazy. So the 13 months we're talking about. And now, since the low here of October 31st, 2022, it has moved up approximately 301.77%. So it had reached a low of around $16. Now it's at $58.01. Very nice. WHR is, let's go to the weekly first on this one. So this is Whirlpool Corporation. I'm not sure when I drew this chart. I mean, this, geez, look at this. This is, let's get rid of that. I don't like that. Okay, there we go. WHR, Whirlpool Corporation. As you can see, it is currently under the weekly cloud, and that is not a place to be adding positions for sure, right? Sometimes it can emerge out of the cloud and then pull right back in. But once it gets under, okay, that's bearish territory. You can see that we haven't had any new buy signals for a while. Not something I'd be interested in. AbbVie on the weekly chart. is starting to show a little bit of strength here. That we got a hammer this week that's developing. It was up 1.84% today. The Tenkan-sen looks like it's ready to cross above the Kijun-sen soon. And the Senko Span A, the light colored blue line, is looking like it's going to cross above the purple line, which would be bullish. But on the daily chart, we're just kind of stuck in this consolidation stage. Yes, it did break above the moving averages in the cloud and the 200-day, but I would not be adding here. It's just a little bit too much noise happening, right? And then finally, Western Union Company. Look at this daily chart. Another reason why you don't want to be adding positions when stock is under the cloud. It can last for a long time, folks. It can last a long time. From back here when it got under the moving averages back in April of 2024, the price has dropped approximately 34.68%. All right. So that's not good. And here's a weekly chart for you. Okay. We had a brief little breakout here, and then it got back under. This was Jenny's final trade back in September and February. Jenny's one of the ladies there on the show. So let's see, where was that? September of 2023 and February 2025. Wow. Jenny's pick, yeah. All right. Anyway, let's go to the Tesla next. Tesla. I like Tesla. Lately, it's been showing a little bit of strength, but when I say I like Tesla, I mean it's starting to show like it's going to pop here pretty soon. Okay. I think it's got Tesla has a lot of issues, especially with their, manufacturing in China and what's going on between him and the president right now. I think that's also an issue. I mean, any day, the president could kick him out of the country. Can you imagine that? Then what? Okay, that's a big question mark of what happens to Tesla. I mean, they're not the best of friends anymore, as you probably already heard. So it could turn real sour for Tesla based on the political stuff that's going on. And let's not forget, I mean, most of Europe right now is not too happy with Tesla either, right? So they've been boycotting and not buying the vehicles. Canada doing the same thing. So yeah, not good for Tesla. Now, it's still under this trend line on the daily chart. It is technically above the 200, which is a rising 200 on the daily chart. It is above the moving averages and the cloud. And what about the weekly chart? It's still stuck inside the cloud. So that's why you don't want to, I personally wouldn't be adding a position here on this one. Apple. Okay, it entered into the cloud this week. It looks like it might close in here by the end of Friday. We'll find out for sure on Friday, of course. But again, it's still under a long trend line. Very similar situation with Apple, because Apple could be affected quite severely if these tariffs go into effect on August 1st. I mean, they have a huge, they're really reliant on China. And that could change the pricing of Apple phones and computers and everything pretty much. So I would wait at least a minimum until the whole tariff situation is cleared for Apple. Apple is more affected, and Tesla is more affected by the potential tariffs than some of the other companies like Google, for example. All right, and let's look at COPX, which is copper miners ETF COPX on the weekly chart. This was one of our members' requests, and this one here, very bullish. Okay, very bullish. Senko Span A is above the Senko Span B. Price is above the cloud. Tenkan-sen is above the Kijun-sen. The 200-day moving average is looking like it's rising on the weekly chart. So it's looking good here. We've got the Chiku Span. That white line is above the price 26 periods ago. That white line right there is the closing price from 26 periods. Okay. So this closing price here is projected 26 periods into the past. And if that white line is above price, that's very bullish. Let's look at the daily. Also very bullish chart. And the beautiful thing, folks, about the Ichimoku indicator is the fact that at a glance, you can quickly find out if it's a healthy stock or if it's under the cloud, it's bearish and it's weak. and there's no demand and there's no interest in people buying it, generally speaking. At least, I mean, it will, of course, at some point it's going to start showing some strength. It will start, you'll start seeing the earliest stages, for example, on a daily chart where price breaks above the Tenkan-sen. Okay. And then it will break above the Kijun-sen, and then it will break above the cloud. But sometimes it can stay under the cloud for a while, and that's why it's best to wait for all of the clearances to take place. In other words, price breaking through the moving averages. Okay, you want it. If you see that the 200-day moving average is sitting right there, why would you want to add a position right here? It wouldn't make sense. It dropped. Okay, over here it broke through. All right, now it started to show some strength. You can see that this was the most optimal probably time to enter because it closed above the 200. It was above the Tenkan-sen. It was above the Kijun-sen, above the cloud, and then from that point, copper, if we measure from that point to that level right there, it moved up 12.3% in just 2 months. All right, so that's kind of cool how we can quickly assess things with this indicator. It's a rules-based system. If you're unsure about your trading, consult the Ichimoku for some guidance, okay? And then you can incorporate and create your own rules also based on the Ichimoku. Some people, for example, they might have a different strategy than mine, okay? I'm looking for all of the things to take place. I'm looking for clearances of all the areas. But some people, they might add a position if the Tenkan-sen crosses above the Kijun-sen. They see that as a buy signal. They want to get in early, okay? So that might be one thing. Even if price is under the cloud, they might do that. That's their decision to make, right? And then they might consider exiting when the Tenkan-sen crosses back under the Kijun-sen in the future. As you can see, this long trend has been in effect for quite a while. The Tenkan-sen has been above the Kijun-sen the whole time, right? So, but of course you can also have these crisscrosses. And so that once prices, that's why it's best to ultimately use all of the elements of Ichimoku when deciding to add a position. Now, folks, guess what? That's going to do it for this video. The good news is if you guys like what you're seeing here and you want to get access to the members only stuff that I do, the member only videos like the one that I posted this last weekend, the 58-minute video where I went over those 20 stocks, including the one that I shared with you guys, and you can access old videos as well. Okay, all you need to do after you've subscribed, so remember, subscribing is free, but then if you hit the second time that you hit the subscribe plus button, this box will pop up, and basically you can select any of these 3 levels. There'll be a little video right after this. I'm just going to let it, actually, you know what? Let me just share this right now with you. Why post that video? Blue Cloud Supporter is $4.99 a month, and you can request a stock to be analyzed in the show, but you won't get access to those videos. Blue Cloud Trader, you'd have to select that first and then hit join button, and you can access the member-only videos. You can request up to 2 stocks or ETFs be analyzed. Blue Cloud Legend level member, okay, you've got basically exclusive member-only videos like the ones from the Blue Cloud Trader. You can request up to 3 stocks or ETFs to be analyzed. Day trading videos are in there as well that I've recorded, so you can kind of get if you're into day trading, you want to learn a little bit about like, okay, my strategy, how I trade. You can learn about that from that. And then daily trade updates posted. It used to be in the community tab. It's no longer posted there. It's going to be under membership tab. So after you've hit the posts, after you become a member, there'll be a new tab that pops up here that says membership. I'll show you guys what that looks like. And there you have it. So you can see the new tab that pops up right next to the post membership. And that's where I post the daily trades that I place throughout the day. I do that and I post that before the market close. So, usually between 2 and 4 p.m. On average, usually around 3 or 3:30 p.m. So anyway, that's it for this video, folks. Thank you for watching. Don't forget to like, don't forget to subscribe, and I'll catch you all in the next one.